Bloomberg Audio Studios. Podcasts, radio, news.
This is the closing bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Scarlett Fu.
S&P 500, keeping a watch on that. 284 names gaining ground on this Thursday, 217 to the downside, 2 unchanged.
Intel actually crossing the wire right now, so let's just jump right to that. The company for the most recent quarter, the third quarter, says adjusted EPS came in at 23 cents a share. Now, the street was looking for 1.2 cents, so that does look like a beat. Revenue was up about 3% year over year here. Also looks like it coming in slightly above what the street was looking for at $13.65 billion. But here's your forecast. The company says that for the fourth quarter, revenue will be in a range of $12.8 to $13.8 billion. The company also saying that it continues to see some marginal improvement here on the build out of that data center and AI revenue business, which came in at $4.12 billion in the most recent quarter.
And I think notably, our Ed Ludlow has been speaking with the CFO of the company and really talking about how the market turned out to be stronger than they originally anticipated coming into the quarter. They're particularly thinking that areas like server build out was better. They saw a lot of money initially, as they say, going to GPUs for AI servers, but there is a significant amount of workload that can be handled by their own CPUs. So I think there is an area of growth. And they were saying, look, we're cautious about tariffs, we're cautious about noise, but on the data center side, bit of a surprise when it comes into how much stronger it was in terms of demand.
I'm also looking for any commentary about the U.S. government investment in Intel. And certainly we did hear from the company on that in the press release. Quote, "We took meaningful steps this quarter to strengthen our balance sheet, including accelerated funding from the U.S. government and investments by NVIDIA and SoftBank Group to increase our operational flexibility and demonstrate the critical role we play in the ecosystem." This according to Intel's CFO, David Zizner.
Yeah, and then addressing AI, right? So important. AI is accelerating demand for compute and creating attractive opportunities across our portfolio. And they talk about including in their core x86 platforms. They say new efforts in other, metrics, but again, addressing some of those issues. And again, we're watching Intel in the aftermarket. I'm looking at that trade up about 3.7%.
Up about 3.7%. And it gets to this idea here that what is sort of the future? We talk about a new CEO, we talk about new investments, but it's still the same old problems. And I am curious. I mean, I look at these comments, Caroline, coming out of your co-host, Ed Ludlow here. And again, I mean, how do you articulate to investors what the long-term story is?
Yeah, about the foundry business. Who are going to be the ultimate demand base for the chips that they might or might not manufacture over in Ohio? They've got to stay committed to that particular build out. And of course, that is why the US government had been such a signal that they are going to ensure that people come to them for their chip manufacturing. That's why we do wonder about where AMD goes for its next chips to be made, where NVIDIA eventually does, and why it's such an important and strategic investment coming from them.
We're actually seeing shares rise now in the after hours, up even more than they were earlier, just minutes ago. Of course, the call has not happened yet, but investors making their way through the press release, the commentary from Ed's interview with the CFO. Intel shares up 6% in the after hours. Ian
King out with a right through and saying, of course, okay, here, Intel giving an upbeat revenue forecast after PC demand grew, boosting optimism about a comeback attempt by the company. Company's fourth quarter sales will be $12.8 billion to $13.8, with the midpoint of that range being $13.3, just below Wall Street's estimate of $13.4 billion. And that the CFO, Dave Zinsner, saying current demand is outpacing supply, a trend we expect will persist into 2026. And the company's third quarter results exceeded its projections based on the underlying strength of our core markets. That sounds pretty upbeat. And, investors' expectations remain, are high. This stock is up 90%. And one big investor, the U.S., the number 3 investor in this company.
And that seems to be why it's riding high. It's kind of interesting, too. They also talk about the refresh cycle on PCs, and that might actually be the bridge for this company. We talked about this a little bit yesterday about Tesla and its sort of robotic, autonomous future, but it still needs that money from the here and now to sort of bridge that gap. We're going to continue to break down the results coming out of Intel. The shares up 6%. but Ford shares now moving in the opposite direction.
Yeah, and let's get to it. Let's get to the forecast, which is something that we certainly care about. The company, Ford, saying it sees $1.5 to $2 billion adjusted Ebit hit in 2025 from the Novelis fire. This is that fire that we have talked about that has certainly impacted, was it aluminum specifically, and certainly made it shut down some of their factories. Also, the company sees fiscal year adjusted Ebit of $6 billion to $6.5 billion, had seen $6.5 to $7.5, and you can see that stock right now down about 3.3% here in the aftermarket.
Hopefully these end up being more one-off types of costs here, but a lot of questions really about the longer-term strategy, particularly with some of the peel back in that EV build-out and the refocus in on some of those ICE vehicles. We should point out the company also coming out with the statement right now about some new models, starting new model production here on that Ford F-150, a conversation in just a few minutes' time that we're going to have with the CEO, Jim Farley.
And I think that it's notable, he's speaking once again directly to the administration here, that Michigan-based company is going to be creating jobs, 1,000 of them, at factories in Michigan and Kentucky. They're talking about helping boost truck production to 50,000 units next year more broadly. Yes, they've been implicated by this fire, but they're really trying to remain committed to the fact that their plant is aiming to build 45,000 additional trucks, with the remaining 5,000 to be produced at the Kentucky truck plant. So really trying to find that recovery story here out of Ford.
Ford shares down 4% in the after hours. Again, we're going to hear from Jim Farley, the CEO of the company, 4:20 Wall Street time, sitting down with Romaine and Matt Miller. The company did cut its adjusted EBIT guidance for the full year. The guidance did miss the average analyst estimates. Shares still down just about 3.6%.
Yeah, the automaker also saying planning to boost that F-150 and Super Duty truck production. We know trucks have been so important to Ford to boost the F-Series production volume by 50,000 plus in 2026, citing customer demand, recover losses from that fire. But again, a lot of questions will come on that fire. We assume one-time theme, but the longer it has had an impact, certainly the impact will carry over a little bit longer as well.
I just want to get to some other earnings real quickly, and we'll get back to Intel and Ford. Decker is the maker of Uggs and Hoka shoes, out with their results in line for the fiscal second quarter on a net sales basis, $1.43 billion. Here's your guidance going forward. The company says for the full year, expect $5.35 billion in sales. That's a little bit light than what the street was looking for at about 5.45 on average. The company says gross margins, though, should come in a little bit higher than what the street was looking for at 56%, operating margin of 21.5%. That's your guidance for the full year. EPS adjusted, of course, as it typically is, $6.30 to $6.39, the low end of that range, right around what the street was looking for here, though you see the shares pulling back about 3%.
Meanwhile, we can look at one particular company that's spiking on the back of its numbers. Payments company, Western Union. We're seeing revenue $1.03 billion. That's just slightly ahead of expectations, but the adjusted earnings per share, they're looking strong, 47 cents. The estimate was for 43 cents, and they still see their full year operating margin of 18 to 20 cents. We're seeing jump about 4.4%, as there seems to be that resilience coming from this payment company amid some of the competition coming to the market.
All right, you got payments. I got gold with Newmont Corporation. Shares bouncing between gains and losses in the after hours. The company out with numbers reporting adjusted earnings per share for the third quarter that beat the average analyst estimate. Adjusted earnings per share came in above estimates at $1.71. Sales at $5.52 billion that beat estimates of $5.29 billion. Shares up in the after hours just about half a percentage point.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.